Welcome, everybody, to our futures class. My name is Mike Fairburn, trading futures specifically. I'm sitting in for Ben Watson, who's taking a little bit of time off. He did work over the weekend. Over the weekend, doing a presentation and uh, live event, and so taking a day off there. Great to fill in for Ben. Fun class to teach, and great to have you all here on board. Welcome to you, Paul, as well as Jenny Michelle. Folks, I caught those first two chats. My For whatever reason, my chat this live stream has been disabled, is what it states. So that's the first time I've seen that. I'll get that popped up though. But I did notice we do have Connie Hill here with us today. Great to have Connie on board. Folks, we're hitting an all-time new high today in the markets. Yes, it's been a little while since we've done that because we've been in this long extended triangle testing the bottom of the channel. Now we're bounced back up to that upper range. We're seeing some strength still coming in today, breaking higher. Now the question is, of course, when you start making a new high across the range, will it become a closing high as well? In other words, will we have enough strength to hold above that level today, potentially extend higher? So that's going to be the key question going forward. Did want to take a look at what's moving a little bit today as well. Crude, of course, a key element of the markets, as you're well aware of. We'll look at crude oil as well as gold too. So with that, yep, some higher levels across the board with our major market indices. But before we get into that, folks, I did want to dive into some disclosure items to get the show on the road here. All right. All right. Well, with futures and futures options trading, there is substantial risk, and wanted to state that it does involve substantial risk. It's not suitable for all investors. Okay, there is. Please read the risk disclosure statement for futures and futures options trading. Be mindful of that. Futures accounts are not protected by the Securities Investors Protectors Corporation. That is the SIPC. Mindful of that. Now, some additional notes: futures and futures options trading services are provided by Charles Schwab Futures and Forex LLC. Trading privilege is subject to review and approval. Not all clients will qualify. As you can see down below here too, a few different points to note. Investing does involve risk, including the loss of principal, and for some product strategies, more than your initial investment. Wanted to state here that, as you can see right here, investing involves risk, including the loss of principal, and for some products and strategies, loss of more than your initial investment. Okay, perfect. I did manage to get my chat window back up. Awesome. Okay, perfect. Okay, and with that, a couple more items here. Wanted to state that, let's see, virtual currency derivatives trading involves unique and significant risks. Now, the material is intended for general informational education purposes, paper money software application for education purposes only as well. And to just wrap that up, Schwab does not recommend the use of technical analysis as sole means of investment research and past performance. No guarantee of future results. Okay, a few disclosure items, don't we, have for futures? So with that, let's go ahead and pull up. Speaking of futures, there we go. Here is our ES right there, folks, making a new high. In fact, extending higher today too, just above our range. In fact, let me just, I don't know what just happened there. Okay, looks like we just went full screen on something. That's really strange. Oh, odd. Okay. I don't know what that is. Getting a few different things this morning. All right, let me do this. Let's highlight this range over here. By the way, anytime you want to do a straight line, just go ahead and go to your pointer right over here to the right and the price level. Easiest way in the world. Much easier to kind of arrange that, but there you go. I got the big thick line coming in right there, folks. We've been talking about this for a little bit now, and that is that 7,600 level. Okay, we did finally get above it. You can see in fact, I've got this drawn up. Any of you that have been in my other classes, I've got a ton of different lines here to really represent where our breakout could be in this extended triangle. This is just the S&P 500 index, but just to highlight some of the lines that we have been waiting for it to really break. This was actually really a key line right here because we'd been in a sideways channel for so long, wanted to get above, let's say, that trend line break on the upper side, on the upper end, And we did that yesterday, and we broke clearly through it where we stopped right at the key resistance level at 7,600 there. So gapping above that is interesting. I guess the key point that I wanted to make here is that level right there, right there. That's kind of the high, that's the extension outside of our triangle range. And you can see that we're getting that because of this up, this high level and this low level right here, extending above the breakout of the upper channel line right there. So that rests us somewhere between, 7,800 and 8,000, maybe not quite to 7,900, but it does give us an extension and maybe a little bit of a pathway or a run for us to break out and rally through. Now, one quick note I needed to state, I talk about this in the swing trade class quite a bit, and that is the fact that we are in the midst of a summer rally. Now, I'm going to try this tool one more time, and if it does that, which is really bizarre, what I'm going to do is just close it. Okay, I don't have that drawing tool. I just have a white screen in place of it, which is really weird, but I hadn't seen that before. Okay, so but the summer rally time frame really extends between like right through here, first part of July, all the way into really the end of August, and really a lot of those summer rally highs are coming in historically, seasonally speaking. Am I lining that up about right? Somewhere in the middle of August. Just a quick note on that. Style up top, the style button. Scoot on down to seasonality right here, and there you have it. Let's go ahead and look at this 5 year. That's perfect. That's fine. You're getting something very similar to the 10 year or 20 year. But if I make it more comparable as a percentage basis, you'll see. And really, the key focus here I wanted to look at is this level right through here. This is that extended run. We'll just use these Thinkorswim drawing tools. Perfect. Right over here, that's kind of your mid-August rally seasonally that we tend to get. Doesn't have to, but we'll often get that rally about into mid-August. By the way, also end of August right through here. Yeah, we get a bounce up to about end of August as well. Summer rally on average. You'll notice over here too, if you ever did want to go back and just look at this on a 10 year, just go down time frame 10 year, something very similar. See the summer rally really starts in July, maybe through the end of August, before you get kind of the pullback September, October. I'll even go 20 year right there. Same similar type of move on average, folks. Doesn't have to, we don't always have to get this, but just wanted to highlight that, yeah, that's where we could be headed if we continue to break out. We shall see how that looks. That is right there. Really, as we look at it, a three soldier up pattern in terms of a candlestick right to our resistance. So I was wondering what we would end up getting there. We got a breakout above that range. Clearly, you can get those on breakouts, but a lot of times what you'll end up getting is maybe a little bit of a pullback to the prior high and a rally. Now, it doesn't mean that's going to happen today. It could still rally up higher. Again, this is a new closing high. And we'll see if it stays that way instead of just a new high. What happens on the with the rest of the day? It does look pretty strong right now. One thing that is fueling this, and I'll go back to our regular markets here, is there's the ES right there, but oil. Oil is one of the markets, as you can see, with that another tentative agreement with Iran. I guess we could start calling those that now because it's on again, off again. But here's the impact of that every time that does come up. In fact, we had one right here, an agreement. It was broken. Oil rallies back, and then here we are again. But maybe coming back down, that's a really big dip today, about 4 points on oil. Of course, that can have a big impact on the equity markets across the board. And we are, gapping up on that news, which is interesting. So, looking at oil, watching this as a guide here too. Quick note around here, around 70 prior lows. There was a major gap up here. We can keep an eye on that level, putting us down really to pre-Iran war conflict, that scenario, which was that gap right there, right at 70. Okay. So with that, let's go back over into our markets here. We're going to start talking about using Fibonacci today, as well as the possibility of just the short-term movements within the market that we're going to see. looking maybe some intraday type activity and moves to track the market higher because I'm going to pull this down here and zoom in all at once. And okay, there we go. So with this rally right now that we're seeing, if we happen to extend, folks, higher, higher, higher over here, we could still pull back, but within the intraday chart, we could have some bounce potential to still continue up. I want to take a look at that here in just a second. One thing that I've done that helps me to zoom into the time frame that I might be looking at here is, I do have a 30-minute chart. I got a daily chart. So I've set this up in my grid charts, which is really helpful for me to do because all I need to do is just arrow over to the 5-minute. Um, and you can set that up in the grid charts here, my daily 35. And I have it lined up like this, just a 3 bar across where I can go, actually it's 4 with the weekly here. But just a quick note that might help you. This is also really helpful for futures markets too. I just have a futures market overview, and we'll go full screen here to highlight and show you how this works. Now, that is our mid channel range right there. That's our center pivot point. And when we have a pivot point, pivot points are interesting because what they'll do is they'll highlight, um, where is the core support or resistance on these markets. That is the breakout line that I had just drawn. You see here on the daily chart showing up on the ES. One of the quick notes that's really helpful here is this can be used as kind of a guideline or baseline for strength. And sometimes what you'll see if you set this up, I'm going to share this too, so you guys have this. But what you'll see is um, some markets breaking down and some just kind of continuing together. To get today, it's kind of a breakout across the board, we'd have to say. That center pivot line helps us with that, but you can see that all the markets, the ES, the NQ, the NASDAQ, the Dow, and the Russell, both making higher highs and higher lows. I like to use this because it will give us maybe a sense of what we can expect throughout the rest of the day. A lot of times, not every time, but sometimes we will see prices like the Russell, for example, might be leading higher or even showing weakness. And so overnight, the Russell might be trending down. And so if you wanted to look at anything in terms of weakness on the day, potential, downward trades versus upward trades, maybe you'd look at the Russell. We don't have that issue today. Um, Everything is pretty much in line to the upside. Everything is pretty bullish. But if you had to say, it's probably the Russell that might be one of the weaker ones, or the Dow. These two bottom ones are oftentimes either stronger or weaker. You can see the Dow is actually coming down right now, short term, whereas the ES and the NQ are actually breaking higher. What is the difference there? I'd have to say the difference is going to be technology, folks, between these two. You're not going to get the faster growing technology stocks in the Dow or in the small cap to the larger cap ones. You are going to get some faster growing companies in the Russell, but you can see right there, both of these are they kind of fall into that realm. Now, let's share that grid with you. Think scripts aren't guaranteed for timeliness or accuracy. Now, this is actually not a think script, but I just want to state that. But this is a grid chart, and let's see, just futures grid that might be really helpful in the morning just to see what is going on. This is what I use when I just get a sense of what happened overnight. It's really helpful for overnight activity as the markets just barely open, but we have a lot of prior activity to see, hey, was there a chance of it opening higher or not? Stuff like that. Although also, I'm going to share with you this one. This is the futures metals overview because these are also very, very active markets too. What's interesting is gold is up. Gold is up 51 right now, 51, just over 51, 52 points, close to that range. And you can see us extending above that center pivot line. Um, Anytime I wanted to expand one of these, just go into that little hamburger icon right there, click on down, go to maximize sell, and there you go. Need I say any more? Hit maximize, and now we can use these little arrows over here to click through each one of them if we wanted that full screen. Before I share this, let me just quickly show you this too, because this is that center pivot point. To add the pivot points on, which I'm sure Ben has showed you many times, but just in case, there, if you haven't seen it, there are the pivot points right there. Now, it's not the Woody's pivots, it's not the person pivots, it's not the SVE, it's the pivot points. That's the one you want. And I've just got the center pivot line in there as a reference, basically bullish above. Again, this is a 5-minute chart. So keep that in context, but bullish above the line, bearish below the line. Okay. So just jumping back to that by clicking that twisted arrow right there, that curved arrow up top, you can see where we're at here. And basically, yeah, just looking at all the markets, they too are showing some strength. Now we can set this up. I'm going to give you both uh, if you'd want these, but they are helpful. And here is this one. All right. And so this is the metals. Metals. Right there, or metals. Okay. And so that's there. Now, in looking at our markets, I want to jump back now and start breaking this down a little bit as we look at the ES specifically. That is what's saved up there. So that's what's popped up. But looking at the ES, okay, so still, yeah, some really good strength in here. So we're looking and saying, what kind of potential setups might we have for today? Um, quick note, I do have down here on the daily chart, I do look at like money flow or unbalanced volume in line with seeing if they're in line with a momentum indicator. Let's say, for example, like the RSI. MACD's also fairly popular there too in terms of price action, price movement. Just to see if, are we showing some strength over here? How is the money flow line doing? We would not get this on the S&P 500 index because it doesn't track volume. We do get it on the ES, which is a great advantage to have. Okay. So what I want to do right now is I want to look and see, we have kind of right now a general idea using multiple time frames. First of all, what is the big picture showing us here in terms of the ES? Well, we've had a really big rally up and that triangle type pattern sideways, and then a breakout again above that 7,600 level. With that in mind, we could extend higher. So what does that tell us maybe about the shorter term charts, the 30-minute, the 5-minute? Well, the longer term might be bolstering a move to the upside. I know I'm stating the obvious here, but I just wanted to state that that's a good reference point, because if it wasn't that strong, in fact, if we were looking right over here, prices coming down off this level, we could say, sure, we have a strong trend to the upside, broke above some prior highs in a consolidation range, and we've just shot up to this level here, and we're coming down though. So are we bullish short term or long term? Like if I'm zooming in right there, folks, right there, that doesn't look great. Let me just go back out, and there we go. That does look a lot better. If I'm bouncing off this top here, if we're looking at a short-term trade, that longer-term chart is an incredibly important reference. Daily chart, I mean, resistance, 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 and again, if we're hitting that and prices are coming down, wow. I mean, even though longer term it might look good, I mean, it could reverse the next day and go higher. We don't see this part. The point I'm getting at is what we're seeing here on the daily has a lot to how the day might finish up. There are a number of like professional, let's say just money managers out there, just as a side note, not all of them, but I've read about this for years. How the market starts off is very often how it ends on a day-to-day basis. And some of them just look at that and they judge their risk on that. So for example, you see how we're up today? They would judge, many of them, that we're going to end up on the day, is what I'm getting at. If we start down on the day, we might end up down on the day as well. So in other words, bullishness throughout the day or bearishness based upon, oftentimes it's the first, they might reference the first half an hour of the trading day. Let me show you how to do that real quick. This is an interesting reference point. So where is the first half? I'm all the way down to the first. Well, here's the 30-minute. That makes it pretty easy. It's the first half hour, or the half hour that we're looking at right now. So what they'll oftentimes do is we are okay. So we've got about 10 minutes left in this bar. This is the 30-minute chart on my daily 35. We're in the 30-minute. What they'll oftentimes do, I'm really going to zoom in now, is here is our 30-minute bar. To give us a sense, are we going to be up on the day or down on the day? They might let the 30-minute go. Some of them will look at the opening and say, look at this, we're up. We're probably going to be up on the day. But others will do this. They'll do something along these lines. They'll say, what was my low on the day? Excuse me, the low on my 30-minute bar right there. Okay, right there. They'll put a low in. And let's just say this ends up being our high right there. They'll put the high in as well. And they'll say, if I trade above my 30-minute bar here, above here, if that's the high, going forward on the day, then I'm going to be bullish on the day. Anything above this 30-minute high, bullish on the rest of the day, I'm looking for. If I'm down here, bearish anything on the remainder of the day. Now, we're a long ways away from bearish, aren't we? Well, how far away? I mean, at least 50. Let's see. I've got to get the right pointer in here. There we go. So right up there, we are, yeah, well, 25 points higher. It looks like a big bar, actually. 25 points is still it's a bigger move. It's not a huge move, actually, but it's fairly decent, I mean, for a 5-minute chart. So maybe we don't get all the way back down here today. I mean, maybe the odds are more that we rally, but then again, that ties into exactly what I was telling you guys. If we're down here, and we've rallied, the expectation is to rally on the day. Now we've got the daily chart to kind of back us up on that too, right? We're breaking above that longer term range. And that's all I'm getting at to kind of, and these are ways to kind of help to isolate your probabilities of success throughout the remainder of the day, which is what we're looking to do here. Okay, let me clear those off real quick. All right, so now we're getting into the time frame where we can look at some of the potential trade activity. Sorry, one last thing. I'm going to go back here because I did want to point this out. This is the volume weighted average price. And so it's an interesting comparison. Do we have demand enough to break above where price is weighted in terms of the average volume? We've got an average volume weighted average price, and we're getting that range where if we're holding above that level, then we've got some buying power coming in here potentially. It's like momentum type demand on a short-term basis when you break above the volume weighted average price. Now I carry this on the 5-minute chart for that exact reason, because it's more than just, let's say, for example, a moving average. It's got the price averages in there, sure, but it's also got volume connected to it, which is unique. You see us take that out right there? Now, let me just ask you this. Do you see any acceleration getting above the VWAP line? Price acceleration, remember, it's where that demand kicks in and maybe some momentum starts too. Is how traders would use this. We're starting to get some bigger bars through here, right? Some extension. Maybe I would say even this, if we're looking over here, the slope of our line begins to increase quite a bit. Here we are off that bottom. It's kind of a slower line. See the slope? But if I go here, breaking above that line, oh, yeah, there's an extension. In fact, if we continue with that trend, look at that. Volume weighted average price. A lot of traders have this, this VWAP line is like a key sort of component to what their intraday trading would look like because it plays such a role in terms of momentum. Now, with that too, if you have that on the daily chart, which I do have in place, I have an anchored VWAP. Okay, the VWAP itself is very good for a short-term chart because it just looks at the volume on the day only. It's just a day to day to day thing, kind of resets and starts over again. Whereas the anchored VWAP, which I've got right up here, anchored VWAP, I don't need to put it on right now. It's already on and I can paint it on my screen anytime I want just by right clicking, going down to the set the date. It's kind of a nice little tool. You have to have it kind of floating behind the scenes though on the daily chart. This will calculate that volume weighted average price from a starting point. I just clicked on it. Did it not go? There we go. No, it didn't go. I've got to maybe select it here. Fair. There it goes. Okay. So notice that this tracks all that volume weighted average price right to this level here. Where did we begin to break out? This is fascinating too. It really is. Volume weighted average price. We broke above. It was exactly on the hold, the close above the high to low day, mirrored this anchored VWAP level. I'm using, these are often used at highs and lows. So what I'm doing is I'm through that entire triangle pattern, I'm tracking where does volume and price kind of meet? Where's the average of that? Where might the demand flip once we get above it? And that's right there. It's almost right at 7,500. You see that? It's like 74.99. But when we got above that level and we actually closed above it, boom. I mean, we just rallied on a daily chart too. So we saw intraday indications from that VWAP. We saw daily indications. And now what I want to do is I want to bring this into an intraday price pattern that we could be looking at to potentially trade these right now. That's what's setting up. There are a number of different ways to trade this, but price patterns could be one of those. All right, folks, if you're getting value out of this discussion, smash that like button. It lets us know that, yes, you are getting value. And also, there is a survey link in the chat if you're able to fill that out. Just 2 questions there. Loved it, hated it, 10, 10 or 1. And yeah, let us know on that so we can and I can get those results. My manager looks at those. I can make sure Ben sees those too. If you do have any topic requests as well. So appreciate you doing that. All right. And by the way, welcome to all of you joining us here today. I did welcome Paul, Jenny, Michelle from the get-go, but we had several join us as I lost my chat window, but we do have back now. And just wanted to state that. All right, everybody. Let's do this. Let's take a look at our intraday chart time frame right here. Now, what I'm seeing here is that really explosive move coming out. Oh, good. Yeah, so we're just hitting, I like to hit this because I don't think you guys maybe get all the probabilities. I mean, different instructors have different sort of probabilities that they've learned over the last couple of decades or whatever. I'm just trying to give you guys what I've learned over the years that you can form on a chart and kind of build going forward. I mean, that's why you're here, right? That's why I'd be here if I was in your shoot in your seat, is to find out, what could be used. And so we have those different sort of concepts and wanted to throw those out just from the get-go because you just don't get different coaches and different instructors all the time. So anyways, that was my first little bit. Next part is the actual trading. Once we have that larger time frame in and maybe a sense that we could be breaking out on the day, showing that strength. By the way, our 30-minute bar, we're almost done with it. The 30-minute range, though, would be like from in my time frame, I'm in Mountain Time Zone, but that's like 7:30 right there. So yeah, we had that bar between really here and here up top. Some traders would say, hey, if I break above, it's bullish. If I'm down below, it's bearish. If I'm neutral in here. One thing that I'm going to throw in here though for you is this. Look at this. Come down here with me and draw this line right there. Look at that. See that line right there? That looks like a bull flag, right? And a lot of times you'll get these bull flags coming out of a base. Now we have bull flag potential here on a move like this, where we could look at like this range right here. I don't have my drawing tools. They went out on me today. It's been an interesting day already. But there, so this is kind of like I'm drawing, there's my little arrow. But there you go. So that point right there is really kind of a change. It's right at 7 o'clock my time, but you can see definitely a lot of consolidation overnight. Did break above the VWAP, and then we flagged right there. Now I'm looking at the next follow through, folks, and that is this right here. That is this follow through is an interesting flag. Now, all we'd simply be doing, I'll pull this guy down here. If we did get a pullback, and I'm just saying it might go this far, it might not, but we could watch for the possibility of a breakout. Tied in with this is a very, very interesting concept. And I'll show you these others here. Let's just do this real quick. NQ. How's the NQ looking? Okay, probably very, very similar right there. If I zoom in on it, you can see flag potential. We're looking for an extended day above the daily resistance line, really kind of a four candle, four soldier up day on the daily chart in terms of the candlestick. The YM was down, so we'll see how it looks here. But this also could be setting up for the flag pattern early in terms of bullishness if we see that broad strength continue. So maybe our first indications of a move here could actually come from the YM. Now, we have this really cool line here. I was just talking about the VWAP that we can use on a 5 minute because the time is reset throughout the day, right? I mean, it's like this is like really good on an intraday basis. It's not like the anchored where we track that over a period of time on the daily chart. It's intraday. So this could represent a support level, but it doesn't mean that if we don't bounce off this level and start to go higher, that we could still look to maybe trade this as a very long-term flag pattern here off the bottom. You can see me drawn at the top right there. So this extended over here could be, I'm just going to kind of overlay this. In fact, let me just activate this and draw it so it doesn't go off our screen. But if I say like here, like right there, right click, boom, boom, there we go. There you go. There's kind of a target already for something like this. Now, we are above the VWAP and we're getting that bounce, and all of that is quite interesting right now. I'm going to zoom in here and just kind of show you guys that right there, a close above this level on this bar would be considered a close above the high of the low day. Now, again, I should say close above the high of the low bar. It's not a daily chart. This is a 5 minute chart. So we have to be kind of mindful of that. These aren't daily bars, but this could potentially get us started. Now, what I was going to show you here is the Fibonacci's. And let's do this right now. Over here, here's the Fibonacci retracement. So off the bottom, click on it and drag it to the top of the range. And I guess we'll just draw to the top, the full top of the range. The Fibonacci works like this. A lot of times price action will come down. You have two key levels, the 38.2, the 50. Traders might often use the Fibonacci tool this way for a flag pattern or just a bounce in general. Prices coming down. As soon as they go down, right below there, can I zoom in even more? Yes, I can. Okay, a lot of times they'll say, if I go below the 38.2, the Fibonacci line, and then as soon, I mean, the very moment that I break above that level, like right there. So let's say we dip below, different line. Here we go. So if we go below this level right there, and we begin to bounce above it right there, that can actually be construed as an entry point. The same holds true with the 50%. I have that in gray, but you can see us come down here. And if we hit the 50, bounce below it and come back up, they would say, oh, sorry, like right there, they would say that's an entry point. You see how they're using the Fibonacci's here? They're saying Fibonacci bounce, Fibonacci bounce. We're breaking below, but then, folks, we are extending back above that level. That is a key point, and that is how a lot of times traders will use technical analysis in their favor. Okay, and that's that break up to the upside. Break up right there. Can we say one other key thing? What else might we be looking for here? What's coming right in the middle of those two lines? The VWAP, right? The VWAP line right there. And so if we get a Fibonacci bounce, it might actually be bouncing off of this or not. But if it's below the 50, some traders would say, let me get it above the VWAP 50 because there can be an acceleration there. We just didn't even make it to the 38, which could still be positive if you're getting buying signals over here, like a breakout or a bounce right through here, right? Let's say, for example, if you're bouncing higher, right through here, it could be, of interest. It could draw our attention into it. We could watch for volume clues down here too. Folks, there's a lot going on right here on an intraday chart but we can start to see some fascinating signs occur with these breaks. Now, Rita did have a question. Can we use the VWAP on a 5-day minute or only on a 1 day? Oh, no. Yeah, you can use it on a 5-day, 5 minute for sure, because we're looking at on a daily chart. And you just use these kind of on a day-to-day though, Rita. Yeah. A day-to-day type basis. It's the AVWAP or the anchored volume weighted average price that you would use otherwise though. Good question. All right. So there we are here, and we're just kind of like stumbling. We haven't really broken out of that range just yet, right? We're just testing this level. We're getting quite close to it. But if we did, if we wanted to participate in a bounce to the upside, and I talk about this in my swing trade class pretty frequently, and that is you have a target on the flag pattern at the high. This is called the T1 target. A T2 would be the full extension of the, let's say, the pole of the flag over here. This is actually beginning early morning hours too. But you could still see something like that, right? Up here to the upside. So we're waiting to see what we get here. Now, if we start to get a bounce and close above that level, and what do we have? Oh, shoot. We just barely got above there. So we've got another 5 minutes to confirm the close above the high of the low day. Do you guys know what I'm saying when I say that? Close above the high of the low day? I think many of you do. Just in case you don't, though, I'm going to clear out some of these lines and tell you, oh, shoot, I got a lot. All right, that's fine. Let's just kill it. There we go. All right. So notice when we're pulling back here, we have a low day, low day, low day, low day, low day. We've not broken above the high of the low day yet until like right now. The last bar right there, look at that. We tested higher and we faked out. That's why people look for the close above the high of the low bar in this case. I keep saying day, I'm sorry. These are 5 minute bars, but it's like right there. It was a fake out, but can we come back up above it and hold? Some traders would put a trade on here. One of the core benefits of doing such a thing uh, on an intraday chart is if we were to get a close above the high of the low day, maybe in the next 3 minutes or so, you don't have to wait too long for these, not like the end of the day or anything, but look at the risk potential if we just did a single contract. Remember, this is an intraday chart. See, it's faking again right there, right around that 23.6 level too. So interesting. There's another fib that can play a role, and that happens to be very close to the high of the low day. That is the low day of the move. Can we break above it? It's the question. Okay, so we're right there. Now take a look at this with me. If we see a pullback here, right, we can potentially still, we can watch this. We're above the VWAP. It's a shorter term pullback. We'll see what kind of a bounce we get. All right. So there's a couple of different things to keep in mind, but if we were to get a single contract in, look at the risk. This is, in terms of the stop. Now we brought up the stop. Um, they're not guaranteed to fill at that price, but they do compete as market orders, and these are liquid futures products. But I mean, let's just say you get out near your stop. If we were to get in here or something, that's it. That's the only, that's the move right there to the downside if you were looking at that. Now to the upside, it could be substantially higher here and obviously, whoa, there, right? In terms of risk versus reward, just throwing out some bars here to show you what that might look like here. Risk, potential reward there, just based on this strategy. Now, are we going to close there? About a minute left right now. Okay. So we've got about a minute, but what we can do, I'm going to zoom in over here into my active trader to show you how this would set up. Okay, so what we can do on the active trader, I'm going to pull this guy down right here, just a quantity of 1 right now, but I'm going to set up a template with an OCO bracket order here for this trade. And you see I can set these up at entry prices down below. And we've got we'll get like a stop order. There we go. So we'll get a stop and an entry level, and I can set it up actually in advance on that level, but we're looking at a time frame, and we might get a breakout here. Now, just one caveat I want to throw out. Remember how we saw earlier today, it was actually technology that was moving? Semiconductors have been kind of really lagging. And if they continue to bounce, we might not have a lot of that in here. Wait a second. Do we have Intel in the Dow? I don't know. It could influence the futures product though itself. Oh, did we get it? There was the last bar. Here, let me just zoom in real quick. We got in, technically that's a close above the high of the low day. Okay. So some traders, if they wanted to, they could come in here and instead of setting it up down here, they could buy a market order right there. And then we can adjust those exit levels as well. Right. Let me just, oh, we got some interesting little, oh, see, that's cool. All right. I'm going to put the brackets in though so we can see it. I had an OCO, but I've got a bracket in now, upside downside, which is actually what I was looking for. Really interesting on that flag pattern right here. I'm waiting to see if we actually take out this prior high now, actually, because we've touched off it a couple of times. Now we're just sort of dragging. Can we show some strength to break through here is what I'm looking at. Okay. By the way, I want to set these up at a higher range. This is going to be like, oh, not 100. Well, let's see. Yeah, maybe 100. And I can set this down 100 and I can always adjust it if needs be. So I'm waiting on momentum now, and this comes down into just maybe a lot of, just experience and years of looking at this. But notice we didn't get a sharp breakout and a close. In fact, both of these bars over here, what did they do? They came back down off the top. We had an upper shadow, so some weakness. So I didn't do it right on the Cajola just yet. I'm waiting. This is just set up in place here for us. I'm going to go full screen here, but we're waiting now for signs of, a potential breakout. The Dow's may be slowing a little bit, and that could be an issue. I'm going to come back here though. So let's just do this real quick. I'm going to go this is all set up in place. We can watch it and track it. But here's the ES. How's the ES doing? Oh, more strength. So that didn't flag at all. We really didn't have a flag potential here. We had a little bit of a bar coming back down, and then we rallied up higher, but you can see where we're at. Oh my gosh, look at the NASDAQ. That's really breaking out as well. Here's the daily on these. Okay, so oh, look at this. So by the way, the anchored VWAP on the NASDAQ is right there. So this can present resistance. It can also show strength if we break above it. A lot going on. I just want to zoom out and show you this before we're done because we just got a couple minutes left in our session here. But remember, the ES already broke higher, but the NQ hasn't. The YM is already higher, but this is the one we're looking at intra-day. How are we doing? Did we get above that level yet? No, we're still just fiddling around that high level. So it's not really a sharp recovery yet. A lot of times when these get going, let me show you guys. Okay, so if we were looking at a pullback like right here, okay, that's the close above the high, the low day. Notice it's a rally. We're seeing strength. We're seeing a continuation of prices going up. Right here, we're just kind of like rounding a little bit. To get us above that, we probably need to have another break here with some strength. So that would be the level. I'm going to do this too because we have to finish. Unfortunately, we didn't get a trade in, but it's hard to. At least we kind of set up what you guys could be looking at going forward. But like right there, I'm going to set an alert over here to notify me, um, breakout question mark. Notify me via text message. We go down here and select mobile device. Got to check that box. And then also up top under setup, go over here and click on application settings and go ahead and set it in notifications so you can have that in place. Super duper quick note on that though. Wanted to state those verbal disclosures on alerts. They're not guaranteed to be delivered or delivered in a specific speed or time frame. Should not be used as a replacement for actively being aware of your positions. I had to throw that out there. I haven't had any issues with alerts. They've triggered for me, but I wanted to just mention that for you guys. All right, on that, but we're very close to it and our time's up. So we're not quite there. But folks, I hope you found this useful. Really today I wanted to talk about, broadly speaking, the general markets. Wanted to look at the markets. Wanted to look at a lot of some of the probabilities that traders can look at. time frames we talked about, that first 30 minutes of the day. We talked about the VWAP, the anchored VWAP, price patterns, etc. So hopefully you found this informative and useful. We weren't really setting up too much for a trade on the day. It was getting close to that level, but yeah, it's a little bit tricky. We just saw a lot of strength here on the ES. And by the way, it just broke it right there as we're out of time. So anyways, you guys saw the trade potential that we could be looking at here. It's really, really quite slow, but just to execute that, because it is breaking up, I'm going to go ahead and just put this trade in now. Sorry. Well, I've got to end this class, but it did hit right as we were talking, and there you have it. Oh, it's rejected. I'm sorry. Anyways, you saw what the trade looked like. I know why exactly why that's rejected. I've got to offset this trade, but that would be the trade in this paper money trading account right there. There's your bounce. Uh, all right, everybody. Well, we're out of time, but be sure to fill out the survey link if you've got that. And thank you so much, Connie, for your help in the chat. Everybody, have a great rest of the day. Teaching some swing trading later on in the day. We're going to be looking at an interesting one signal, just a crossover trade if you're able to attend. But on that note, take care all. We'll see you next time.